Hi, the Bank of Canada decided today to leave their overnight rate unchanged, and we expect that interest rate to remain at the current level for the foreseeable future. But at the same time, the bank published its quarterly monetary policy report. There's a lot to unpack in that report, so let's take a look at some of the projections from the Bank of Canada. So we have a couple of charts, and really on the left-hand side, this is the picture of what the pattern in GDP and some of the components of GDP could look like. So the bank doesn't call this their projections, but really it is a scenario that the bank is using to evaluate how the economy is going to evolve over the next couple of years. So at this point right here, this is where we were at the end of 2019. At the end of 2020, this is where we're going to be or expected to be, and at the end of 2021, this is where the last quarter of 2021 is placed on the chart. So as we're seeing, we got a sharp if you focus on the black line, which is represents the GDP or gross domestic product, you see a sharp decline in the second quarter of 2020, some rebound in the third quarter. We make up basically, or the projection is to make up about 40% of the drop in overall economic activity in the first half of the year. So we make up in the third quarter about 40% of the contraction that was recorded in the first half of the year. But if you focus on some of the components of GDP, you see that we expect that business fixed investment is going to be a drag on the economy as it contracts very sharply in the second quarter, and it takes time for business investment to actually rebound. Consumption is a major driver of the overall Canadian economy, and that's represented by the dotted red line. And you see a somewhat of a V-type recovery in consumption, and that matches up with some of the labor numbers that we've seen recently. We just got numbers from the June labor market report, and as expected, it shows that jobs are growing again. People are getting back to work. But as we're seeing the job numbers go up, at one point later in the year, in the second half of this year, we should expect a rebound in the labor market to taper off. In a sense, where businesses are going to bring back workers, but at some point in time, the gains that we're seeing in the labor market are going to slow down. And that would be consistent with the projections of the Bank of Canada with regards to consumption, which follows this particular pattern. So slower consumption growth at one point in the second half of the year. Another thing to notice is that despite the rebound in the second half of 2020 and into 2021, we're looking at this point right here at the end of 2021, and we're not back yet to an overall economic activity that we observed at the very end of 2019. So there is a rebound into the end of 2020 and into 2021, but it'll take more time into 2022 to actually see the economy get back to where it was at the end of 2019. Now, focusing on the right-hand side chart, what I just said about consumption and business investment, well, if you look at the survey of the bank, survey of businesses, that's actually quite consistent. What the businesses are saying is actually quite consistent with the projection or the scenario from the Bank of Canada. Businesses are basically saying, if you look at the first bar chart over here, businesses are saying that they're can actually ramp up production rather quickly, but that they don't anticipate sales to rebound very quickly. That the rebound in demand that they face is going to be gradual, and that matches up with the pattern in consumption that I was talking about, as well as businesses or business investment rebounding, but at a slower pace than what we're seeing for consumption. So for more information, you can go to our website at fcc.ca/knowledge, where we're going to continue to monitor trends when it comes to the macroeconomy, as well as some very specific ag and food trend.